What's going on, guys? Jeff Weibo here, and in this video, we're just going to go over what is a private REIT. So private REITs are not operating on a public stock exchange, so that's why they are private. They are more illiquid than a stock exchange one, but also less volatile, because on a stock exchange REIT, you can just click sell. Within a private REIT, there are rules and redemption requests that you have to put through. So my REIT is a private real estate trust, foundation capital. And so far, we've raised $7 million, which relates to about 25 million of assets under management. So $25 million of apartment buildings. And these apartment buildings are in Southwestern Ontario. You could drive to the addresses. You could go check them out. They're physical assets. Within the private REIT, we typically use your investments to do renovations, for deposits, to boost the values so that we can provide you guys 15% plus targeted annual returns. So for example, if you invest $100,000, our goal is to have that be $15,000. So 100,000 plus 15,000, $115,000 at the end of 1 year to you guys. That's the goal. Sometimes we even hit more than that, but that is our target every single year. And then your investment would be 115,000 times 15% again, as long as that's our target for the next year. So you can see how people will start to compound. But to make a private real estate investment, you're not able to just go on your Wealthsimple app or go, within your bank account and buy a stock. You have to you have to qualify to make this investment through an exempt market dealer. They want to make sure that it's not your last 10 grand of your life that you're making your investments. You go through the EMD, exempt market dealer, and the one that we're using the most is called Equivesto. So you go to Equivesto. The links will be in the descriptions here. And Equivesto, you'll click invest now, but you'll log on and make an account, and then they're going to determine if you're an accredited investor or a retail investor or eligible investor. Everyone is allowed to make, you could probably at least make a $1,000 cash investment, but if you want to be able to do over the $10,000, you're going to have to go fill out the forms. Once you're accredited, you could invest as much as you want. And again, if you look at this big total, we have $7 million raised currently. We do have $1 million investors, but we also have people that are starting off. They're 20 years old. They get their $1,000 in, and the next paycheck comes in, and they do another $1,000 here and there. But they get their feet wet for $1,000 in private real estate investments. And again, not volatile like the public stock exchange. This is just apartments, just buildings. Not too much. It's boring, guys. This is a rental property. We renovate them. We make kitchens, we make bathrooms, we put a tenant in it, we manage the tenant. The tenant pays rent, we take care of expenses, and that's it. Like, keep the expenses low, keep the rent high. Investors get a portion of the rent and a portion of the appreciation. And that's the real estate game that we are doing. We created this REIT in 2023. We've been buying big buildings like this since 2019. A lot of people wanted to partner with us, and we determined that this was the best way to do it, not through joint ventures. So we made the private trust where people can invest their money. And again, you can invest with cash, TFSA, RRSP, RESP. I have some videos on the channel talking about how much, RESP is the Registered Educational Savings Plan. If you put $2,500 a year in for 15 years, plus the government backing at $500 every single year, your total, it's in my other video, but you'll have around like $172,000 at the end of 15 years. So just great for a couple semesters in 2035. So, or correction, 2040. But that's the kind of things you got to think about right now, is get your investments in now, because what you do in 2025 will help you for your retirement in 2030, 2035, 2040, 2045. Starts now. And once you see how much it starts compounding, you'll kind of just wish you invested yesterday. So there's like I said here, low volatility in a private trust, transparent and easy to understand. There's recurring monthly distributions to you guys if you wish, or you can take it as cash flow, or you can reinvest it. Experience management. I've been buying rental properties since 2012, doing student rentals, learning the ins and outs. being a landlord, living in the properties, moving to duplexes, moving to triplexes, buying single family, flipping homes, buying big apartment buildings, hosting investor events across the province, across Canada, across North America for masterminds. Very experienced. And my two partners, Mitt and Pure Sand, they are former CPAs. So you got myself, that's a real estate agent and real estate investor, working in the trenches and really understanding the ins and outs of property management and coaching all our managers on what to do. And then we got Mint and Pure Sand handling the books behind the scenes, making sure that you guys, again, look at here, tax efficient returns, and just making sure that you guys get the top value, because that is on our mind at all times in the REIT. We're just real investors. Okay. We're just out there. And again, all we're doing is renovating apartments, putting a tenant in, managing the tenant, and keeping the expenses low so you guys can get the high returns and the building appreciation as well too. So you get 7% cash flow, and our target is an 8% plus appreciation, which is the 15% plus targeted annual returns. Super easy to invest. You just got to go onto Equivesto and make your profile, and you'll be Gucci after that. So you can see here, FCP REIT, Foundation Capital Private Real Estate Trust investors, they buy units. Units are kind of like shares. Right now, as of this video, the unit value is $12.40. We started at $10, and then it went to $11.50, and now it's $12.40. And we're going to be doing more reevaluations of the unit share price throughout a year. So it's not just going to be annual. It's going to be more quarterly at this point. So that's why it's important, if you got money on the sidelines, to get it in now, because the unit price is always changing, which acts like a share price. We take the money and we invest in real estate, properties, and mortgages. We haven't really invested in any mortgages. It's just there in case we have funds that are idle. But for the most part, for 99% right now, 100% right now, it's all real estate and properties. And the portfolio, we got the rental and mortgage, investment income, and capital appreciation. So that's what's coming out the back end there. You get the rental money, and you could get mortgage investment income, but we're not doing that. And then you get the capital appreciation. And then if you shift over to the left there, you can see there's monthly distributions, and it increases the net asset value, and it rinse and repeats again. You can see here our investment philosophy, rent. We do prevailing market rents, and we only buy along the 401 in Ontario. We're not buying in Northern Ontario. We're not buying in Saskatchewan. We're not buying on the East Coast. We're not buying in the volatile Alberta. Just Ontario, just basically up and down the 401 where job market is strong. The strong economics of the cities are strong, and that's what we do. And again, trying to make this as boring as possible and give you guys the best returns. We're not shooting for the moon. We're just chugging along at 15% plus on your money is our target. So they get refinanced. They're CMHC insured. I guess I didn't start at the just started at the buy there. So we buy them, we renovate them, we rent them, refinance them, and we repeat. That's the BRRRR method. So on the buying, there's a quality properties. I won't even read it for you guys, but basically, like I just said, we're buying in these strong economic fundamental cities. That's one thing, because you need the tenants to actually want to live in these areas. Then they have to actually have employment in these areas, and that's why we're buying on the 401. Then we take a unit that's got yellow walls, and I have lots of videos on the channel, like bad looking units. And what we do is we renovate these units. We make them quote unquote look like a Toronto condo. And then a new tenant's going to love to move into here. We provide them with in-suite laundry and just a modern looking apartment, get it rented and get it rented for honestly the top rents of the cities. And that's it. So then once you get the top rents in the rent roll, we were able to refinance these properties and get them CMHC insured there, and go look for the next property, because that one is stable at that point. So, and we just manage it at that point. So it's just putting people in place to manage those. So you can see here, one of the ones we do have is 57 Wellington Street in London, Ontario. That's a sixplex. We've renovated that entire building. It's operating. Even if there's turnover, we're doing quick turnovers and putting new tenants in it. And it's right on London, Ontario's bus rapid transit route. That I guess that's a bonus. But the the city's putting a major bus route right beside it there. And then right across the lot, so literally there's this one, and then see where the grass kind of goes to the left, you got this 11-plex here. And this 11-plex is about 90% renovated. There's about 2 more units we could do, but we also have some advantages here as well. There's a boiler room that with a storage room and an old laundry room, because now we do in-suite laundry. So we have this square footage, and we're looking to actually put through permits 2 different apartments in that area. So Foundation Capital is always looking for ways to improve rent. And this is a bit of an older photo, but because we have this, the front's looking all modern now if you drive by. But 8593 Thames Street in Ingersoll, this one was a great cash cow for the REIT, because there's 3 commercial on the bottom, but there's actually 18 apartments above. And those 18 apartments are like all bachelors, but you'll never believe this, but we're getting $1,300 now for bachelors. So and our goal is probably only $1,250 for a bachelor. So $1,250 times all those apartments is our goal, and we slowly turning them all over as a tenant fails to pay rent and has to get evicted, but also just natural turnover, people move. Also with those smaller apartments, people do end up moving more, so we're able to go above the rental guidelines of the province, which is only 2.1% for 2026. So we're able to, get a chance to re-rent for even higher. And then this one's in Chatham, 200 Emma. And this was easy one for us. These are beautifully renovated units in here. And bonus, this property is like literally, how like every rental ad says it steps from this place. This one is like just steps from the hospital. So we also have a couple other, we just got to update our slides here, but like I said, we're buying in southwestern Ontario, so you can kind of see this pocket. To me, the money flows out of Toronto, and the 401's a major highway that's not going anywhere. It goes all the way down to Windsor, and the cities that got built around this natural way, probably because the Thames River's going all the way down that way. So the 401 gets there, and London, Ontario shows up, and St. Thomas is big now because we got the Amazon warehouse there, plus EV plants. So we're looking to acquire some St. Thomas properties for the REIT. These are just the cities where people have jobs, and it's all, this game is easy but not simple. All you got to do is have good units, nip all the problems in the butt, renovate them, have management in place. But when you guys just have a duplex or a triplex, it is very difficult. If a tenant doesn't pay, you're at 50% vacancy. If the upper tenant floods the toilet, he floods it onto the bottom guy. The bottom guy's mad. The upper guy wants the toilet fixed, et cetera, et cetera. You don't really want to deal with that. You go back to what you really want to do is make money. And here's the guys in the private real estate world that is going to succeed for you. $7 million is already invested in the corporation. Hopefully, if you click on the links on this video in the future, and you'll see if we're still at 7 or if we're at a lot higher. But yeah, there's myself. I deal with acquisitions, construction, focus, all the management stuff, all the top level stuff like that. I'm a real estate broker, so I'm able to negotiate the deals, talk to other agents, landlords, always looking for the next deal, because we need a pipeline of deals at all times. So that's the fun stuff for me. And then bonus there, you can see I had 2 tours to Afghanistan. I'm a Canadian Armed Forces veteran, bringing that onto the team, bringing that as a kind of a management element to the company to, you can win wars, or you can win wars in real estate. So bringing that over to the real estate world now. And then we got Pure Sant and Mitt, and both, they've been buddies for a long time, and both of them are in accounting, and they've worked at former places like PwC, Dream, and just really, when you guys have those crazy tax questions that I never know, these are the guys. I said, Mitt, Pure Sant, over to you. So that's pretty good. You can see more investment terms here. The fund, Foundation Capital Private Real Estate Trust, it's unincorporated open-ended investment trust, so there's no limit. And we have a 100 million in Class A units. That's our target to raise. And so we've done 7% so far, because we're shooting for the moon. Why not, right? Land on some stars. And you can see here, we got 12 to 15% total is what our targeted investor returns per annum. It's a 7% distribution and a 5 to 8% capital appreciation. The first year we hit 22%, and last year we hit 15%, our target. And we're just hope there's more sales in the market, because we are in cash that the tenants, all the rent, that's how pretty much they would appraise it on, is how much money the buildings make. Ours are doing really good on a cost approach. It's just there hadn't been too many sales in Ontario in the little while. So we were a little compared down, unfortunately. It's tough being at the top. They got to compare you down, because we get third-party appraisals, third-party audits, and you can use your registered funds, RRSPs, your RRIFs, your RESPs, your TFSAs. Yeah, go back and watch the video about what how you invest your TFSA over the 15-year period, what it would work. It's on the channel. And then people sometimes like to ask this, like, what are the mortgages? So 75% maximum across the portfolio is the leverage, and 85 to 90% on any single asset. So there may be a time we have an 85 to 90% loan to value, but normally across the portfolio, 75% is what we have here. So your money's in the properties. And for your fees, you can see the offering memorandum. And for future financial advisors, we do have a fund serve code. So hit us up on that if you want to be able to sell Foundation Capital's product. And we are always answering those, and we're all over social media. But yeah, you go to Equivesto and invest now. Get qualified, put your investment in. If you're going to use registered funds like TFSA or RSP, they will send you over to Olympia Trust, and they'll make you an Olympia Trust account. And then from there, Olympia Trust will, you can make your investment in Olympia Trust. There is a little bit of fees. Anything that's registered, TFSA or RSP, you will pay Olympia Trust a fee in order to make the investment. If you're just doing a cash investment, no fees on your end. One last thing, I guess, would be two things. If you would like to make a withdrawal, you can put in a request at any time. But in the first year, there's a 7% withdrawal fee. And in the second year, there's a 5% withdrawal fee after 2 years. So ideally, you make a 2-year investment, no fees on your end, because we got to actually use this money to renovate these apartments. You can't just go in and out, or no time to make it. So those are the fees, but most of our investors are in it for the long term. And if you're watching this in August, there is a 2% bonus right now. You can see here, limited time bonus, 2% bonus units on an investment up until August 31st, 2025. So on 10 grand, you'll receive $200 worth of bonus units, 16.129 units. So you can get a bonus. 10 grand seems kind of small on that, but if you had 100K, you get 2K right away into your investment. So invest your $100,000, you get 2K to start, and then 102 grand will be earning at 15% plus targeted annual returns. So thank you guys. We'll see you on the next video. Bye.